Okay. So once you realize you got an up move, right? If you see this up move and it gets taken out, then this needs to be a light bulb to say, okay, this is a potential order block. Once you see that that low has gotten taken out, the low referring to over here, right? Once you see that, you need to light bulb that, right? Just like what happened over here. If you see there's a abrupt up move, but then the low get taken out and a new low is created, you need to see once that new low is created, you need to be watching for price to come back to this low, right? Let me mark it off a little clearer. You need to start looking for price to return to this level right here. So as we see price take this low out, you're just gonna be patient, right? And just let price. Now you this gotta immediately, this broken retest right here, right? But see, when you break and retest, you get only the first part of the move sometimes, right? You don't get the return to the order block, right? So in this case, you would have had the order block, the new lows created right here. Then you would have had a return to the order block and then the rejection that gave you all this. You would have been in this whole move. You even got another, here goes an abrupt move to the upside. If you don't take it from up here, you wait, you key in on this area right here, and you let price trade back into this area. And then you drop down to the lower time frames and see if and when price is going to reject in here, right? Here's another area. You could use this one right here. You could use that. Where low, you keying in here, price took it out, made a new low, and it made a new low right here. It returned to it, never traded above this, it dropped. It made a new low, price returned to this area right here, made a low, but it didn't make a new lower low. So this might have been a sign that it could have been reversing right there. But it still never closed above this order block right here. And it even gave you this move right here to react to. And you would have had these entries right here. Okay. And then sometimes to keep price from when price gets to like a key area, like this is a bullish order block right here, it has to throw in another bearish order block to continue the price to go down if it needs to keep going down like it did right here. This random order block that it threw in right here isn't so random. It's actually to uh, push through this bullish order block. You'll see these random order blocks thrown in like this. If it has to break through an order block in the opposite direction, like this is a bullish, it had to throw a bearish to break through this, or you'll see one like this thrown in the middle of an up move because it needs to break a high. Like this area that this was a high right here. So it wasn't gonna break this high without throwing another order block to keep price going. And they threw it to break the price initially. This was the high, this broke it over here. And then they returned back down to it pretty much over here to get it to keep going up. So you'll notice that it happens like that kind of often, right? And so with us being down here, 4 hour, right? High, order block right here, bullish order block. That's why we're getting this rejection right here. That's why we're getting our rejection. This is a bullish order block right here. And this is on the 4 hour from this high to down to this low right here. And there is another one right here. It's cascaded inside of this, but all of this one is basically at the 50% of the bigger one. Then there's also one right here, here. So we will have to keep this in mind too. But overall, this is the primary one. And whether or not this digs down further into this, we don't know yet. But if it does, this would be my next area in interest around this level right here, 42.80 to 42.87, 42.90 area, if it came down to that. So
on daily, this is this rejected order block on daily.
it also did too. Yep. Yep. So you see it on the daily, right? This is the high of the order block. That's the low. In this case, when you have a long wick, I usually take in consideration both the wick to wick and then body to body. So you would have been looking at here, and you would have been looking at here in a situation like this. And that's why I got those different fib levels, because sometimes you'll see me do this. Fib order block, right? Here's the 50%. See where it hit? Almost perfect, right? So I'll usually have a line.
I took that last body only. I sent that chart on this chat. So it just missed 50% of that order block.
You did the body of it.
Yeah, only body.
Okay. Of just this one candle.
Yeah, exactly.
Yeah. So in this case, on the daily, this is the whole order block right here. If we just do body to body, we right here. So this will give you a range instead of just having that one level, and your range would have been from here to here. If you had a went off this one right here. Now, if you're looking at this last down candle right here, you still would have been okay to just use this, but you would have missed this opportunity right here, because you would have been thinking it would come down more into
yeah, exactly. And for just because of this, because it missed just, I think, one or 2 point from 50%. So I missed that buy also, because I was waiting to come little bit more down.
Yep. Yep. So that's why, here's the thing, right? You got to look at the last series of down candles before the up move, and you have to look at wick to wick and body to body. And you can look at the last down candle in a series of down candles. So if this is like more into order blocks, because I don't think I taught y'all this yet, but when you see like this one right here, this is just a single candle order block right here.
Yes.
And then this is a series of candles, a series order block, right? Where you have multiple candles before the down, the down move before the up move, right? So you would want to consider all of these candles. And you will also want to like break it down even further, so that you get this zone right here. where you got the wick to wick and the body to body. You got the 50% of wick to wick, 50% of the body to body. And then that's where this move gave you this up move from right here.
Yeah, actually, I forget that point, how to do that.
Yeah. And so once you got this zone, right, you just say, okay, cool. I got my zone from off of the order block. I'm gonna drop down to whatever time frame I want to use after that. Let's say 5 minutes, right? And at this point, you just putting in interest. Okay, this candle wick reject. Okay, cool. I'm gonna put in one right there. Soon as I get it in 100 or 50 pips in profit, I'm gonna put it at break even. It came back. Maybe I took a little piece off. It came back, stopped me out right here. Okay, cool. I'll put another one in from here. And okay, it went another 50 pips, 100 pips. Okay, cool. I'm gonna take a piece of it. Then, I'm gonna try one last time. It came down here, rejected. Next counter put me up, boom, it's gone. It don't never come back there until it still ain't came back there.
Can you go to the 4 hour though?
Cool.
So today, I don't know if that's today, that up move, that's what I was trying. Okay, because I had figured out exactly what you just showed all the way down, but that pullback up move that it did, I don't know if that's today or that's what I was trying to figure out, like what made it go back to that area. I couldn't figure out what's in that area, why it retraced there.
Why it came back here?
Yeah, like to retrace up to almost the W and then it stopped. Like where would you look for an order block for why it went as high as it did? Like almost to the weekly.
So this did something I didn't account for. There was a imbalance right here that it traded to right here. Which is from right here. To right here. In a situation like this, I should have caught that, but I didn't. I think this happened. Yeah, this happened in London. That's why. But this volume, and this is what's called a fair value gap right here. And when you see price have a wick low right here, a huge bearish engulfing candle, and it doesn't balance out the price. And when I'm referring to balance is, you see how this wick low right here, then we had a candle that's bearish. Then the next candle right here came back up and touched this wick right here. That's called a rebalance and redelivery. And then once the wick came back up, you don't want to see it trade below the close, and it doesn't. And then it immediately drops, right? This didn't happen in this area, right? This didn't happen in this area. It also didn't happen from here to here as well. So this will be an area you would want to look for later on, because you had this low price trade through, no rebalance of price inside of this wick right here. So this would be another area you would want to look at, along with this huge order block right here. So in a situation where you have price push up to this, it just came up to here. It never returned to the weekly because it had this fair value gap right here. And and it would just reject it, right? And we were thinking like, oh, it's gonna come down here, reject at the daily at the time, and then push up to go back up here, which I thought it could do that, but we are obviously still pushing down. So that's kind of what you want to look out for.
I got you now. So you pretty much look at the current move to see what's happening, I guess,
Yeah.
in a sense.
Yeah. And once you recognize what the current move is, you want to see like, where are your
Mhm.
rebalance candles? Where
See, I
are,
was trying to look to the left of all of this, but yeah, over to the left more. Like I guess in the past, yeah, like from over here. Yeah, that's what I was trying to figure out, like if it was something in that area
it is,
where you had your
that's this right here. That's this area right here. But like I was saying earlier, this order block right here that kept pushing price down took us to this one right here. And we rejected, right? So if we at this order block, you always kind of got to be thinking like, okay, we need to go from one order block to another order block. That's usually what happens in price. You even right here, this order block dropped, price came back, dropped to the next one down here, and then pushed back up, made a new one. This was the new one, went above it, dropped, came back to this one, pushed up, right? Got back to this structure, right? Only way you breaking it is if you do another order block, price push up above this high, right here on this area, make a little short-term high right here, price push above that, it drops into it, it fails it, but then price come back down into this area where this order block is, down candles right here, price break above this high, make a new little short-term high, return the price, push up, repeat all over again. Now up here, it want to go down, right? So if it want to go down, you need the order blocks to the downside. Price push up, price trade below it, makes a new low here, price returns to it, taps it, wick rejection entry, right? Price push back down to the low, it doesn't break it. We get a huge up move, trick people to think it's gonna buy, then they drop it, right? Make a new low right here. The last low we had was over here. That's the order block. Price return to it, weak rejection entry, drop, new low. We holding this one, but we creating new ones. And so at this point, if this is gonna buy, let's go in the 1 hour. Where price is right now, it's the 1 hour order block we need to pay attention to. Are we gonna break below this one? If we don't break below this and price just return to it, like it already pretty much wicked it right here, but if it's not like just running away from it, then I want to see it bury a little deeper into it, right? And if it buries deeper into it, I'm just going to drop down to the lower time frames, watch what it does there. Then, okay, if it's not reacting to, okay, let's say we're going to use this 1 hour order block right here, right? And it gets to it, but it keeps trading down into it, right? Okay, cool. I'm going to go to 30 minutes. All right, cool. 30 minute, I'm going to watch for it until it gets to this point. If it holds here on this, let's say this is a order block right here, even though this is a cluster right here. But as it goes deeper into the order block, I'm just going to drop down to a smaller time frame. Okay. And I'm just watching it at these different areas, right? To see if any one of these caused the reaction. 5 minute. Okay, so we had an order block. This one, 1 hour. The next best one is on the 5 minute, and you would have had this one right here. So even on the 5 minute, okay, it comes down. If it comes down to here, that'll be the next area. I'm like, okay, cool. It hasn't, price keeps dropping. It has come down to the 1 hour order block, which is around this area right here, but it's still dropping. So on the 5 minute, I see there's another clear one right here. As long as it doesn't close below that, I'll still be willing to take this. And that way you can reduce your risk, and you can also get a sniper entry if it goes.
Corey, I have a question. So I missed that move that you were talking about with that order block. And that was at more the close of yesterday. But then I saw it on a 15-minute that right before the market closed, right around that bearish order block on a 15-minute.
On the 20th?
Yeah, wait. Yours look different than mine.
Share your screen. Share your screen.
Okay. Let me jump on. I don't mind sharing it, but let me jump on. I don't know why it looks different on your screen.
Okay.
All right, hold on.
Bro, you look tired, dude.
I mean, out of it.
Oh, I didn't realize it. I didn't even know I still had my camera on.
Oh, glad I let you know.
It's all good.
I always walk and act as if somebody's always watching me, no matter where I'm at. I have a habit of doing that just in case. I don't know. You never know if somebody got you recorded on something in life, really.
Oh, yeah, I didn't realize it.
You still kept your camera on.
Oh, I don't care.
Oh,
Can you let me share, Corey?
Yep.
It's all right. Can you see my screen? Oh yeah, I can see it.
Mhm.
All right. So I miss this down here. But where I drew up this 15-minute, and I don't know if this is risky, but this was a pretty good entry right here. I used this order block on a 15-minute, and it broke above and came back and retest and just shot up from there. I don't know if that's a risky one. And I didn't know, because on the 15-minute, I've always kind of used the daily and the 4 hour. And then drop down to get my entries. But I saw this order block on a 15 when I missed down below. And I was like, well, dang, could I use this one?
Mhm.
So I just tested out, and whew, it was nice. So
Yep.
is that a possibility, or is that more risky to do?
No, that's fine. The only thing you would have did was your stop loss would have just been below the wick of that. And
This
just
one right-
keep it going. Nah, your stop loss would have been
below this.
Yeah,
Oh, I got myself. Okay.
that's it. That's the only thing I would have did if I was still gonna get into that. But other than that, it's nothing wrong with it. Because like I told you, they have to throw it. Like they had to throw it to break through. Let me annotate right quick. See this right here?
Yeah.
That's a bearish order block. If they want to get through that, what they have to do? Bullish order block.
Order block. Oh, gotcha.
It's right on par with this area. These match. These are the same exact orders. This
Yeah. Ah,
this set of orders over here had to be relinquished, and they did it over here on this set of orders. So everything they put in on the left, they closed it out on the right and added on over here to keep it going up.
Quick question while we're right here. I'm sorry to interrupt both of y'all, but because the one, okay, I'm sorry, the bearish one to the left, right? The first one that you circle is a bearish one, you said, right, Corey? Yeah, that one. All right. It says bearish. So my question is, over here to the right where it started buying that, is that order block now canceled because we got the one on the right? So why it went up? Because like I would have thought that the bearish order block would have blocked it on the left. I don't want to annotate two at the same time, but before it started buying like that, like it just went through that. Is that order block now canceled because of this bullish one?
This one.
Yeah, is that first one canceled because of the bullish one on the right?
Mm-hmm.
Ah, okay. Appreciate that.
Yeah, I mean, you ain't even gonna really, you're not gonna look at this one again, the one on the left. The one you want to consider is this one on the bullish one. That's where this little move came from right here too. So you had two of these. Oops. So at this point, you had this move. You had that order block, this move right here. Then you had this move that reacted to the same area.
yeah, and that's where I bought up this afternoon. Yeah, I mean this morning. Yeah, it was around 11.
Even had this little area right here. All same order block.
Now, so now that where we at, how it broke below it, is that because this is a 15-minute order block, which is a smaller time frame, so it's not going to do that many powerful moves off of it, or what? Is it easier to break through it because it's a smaller time frame?
Yeah, it's easier to break through this because
Okay.
it's a smaller time frame. So at this point, once you see that this one's getting violated, right, and we starting to pierce through it, and we still actually haven't gotten the close of below it yet. We hanging around there, right? We hanging around it, but we actually still haven't violated it yet. So it could still go up from here. So that'll be the question.
Is this the Fashion Nova discount area that you always talk about?
It is, but usually when I'm referring to that, I'm talking about on the higher time frame.
So Corey, once an order block has been filled, you no longer have to acknowledge it. It's gone. It's like no longer a concern.
Because typically there's another one in place already.
Okay.
So if we just looking at this right now, right? And we are, let's go to the 1 hour, trees. Okay, where is your last up? We in a down move right now, right? Your last up candle is what? Right here, right? Did we make a new low?
Yes.
Okay.
Yep.
So at this point, you need to focus on that candle right there.
This one right here.
Yep. And that candle is your newest order block, right? Because this candle is the candle that has had the most recent low to be made, right? That candle has given you the most recent low. So you need to be paying attention for price Once you see it, return into that candle from the wick to wick and from body to body.
I'm glad you taught me that because I've been doing, if I see these large wicks, I've only been doing body to body and not wick to wick. So thank you for that extra nugget.
Yeah, that'll cover the whole basis for you. Then, you know, what I typically do is at the low of the candle, I'll put an alert, one alert there, and then I'll put an alert right around the, usually put an alert around that little 50%, the 250% areas, just to kind of give me a heads up, like, oh, it's still going. Or I'll just put the alert, let me see. I'll put it at the wick down here and then at the body right here. And I'll just wait for price to get to these areas. Sometimes if it's up at this point and it still hasn't showed like it's gonna reject yet, I'll throw another one in this little area right here.
Oh, gotcha.
And I'm just gonna wait, you know, just waiting and see what it does right there. If it don't reject, then I just look for the buy above the order block.
Oh, so up here,
Above it, the high.
this one.
Mhm.
Ah,
That's also your breaker structure too.
I'm about to say your breaker. Yep.
Yep.
So that's usually like when you call the plays, when you be like, all right, I'm gonna put a buy stop up here because I mean, so it'll just pull you in when it's done doing all this nonsense below.
Yep.
Okay. And my another question, I don't know if it's my last question or not, but I remember reading in the stuff that you sent us with the steps for bullish and bearish order blocks. It said something about like London kill zone and stuff in there.
Mhm.
That part was throwing me off. I was like, okay, how do I, is it like guaranteed and it's London kill zone the file order block? That's what I was trying to understand, back testing.
Let me grab the screen back.
Appreciate that, Trees. You did a good job.
Okay. So what that's referring to is, okay, so you know London is basically 2 to about 5, right? The New York kill zone is basically 7. Hang on. I'm not gonna lie about it. Two to 5, 7 to 10. Those are your 2 kill zones, right? So if you see an order block made within that area or that time frame, you want to kind of keep an eye on those more so than anything, because one made in this time frame is going to have a lot of value later on, because that means that there's a lot of trading volume in that time frame. Like this move right here, higher time frame order block. This is the high was made in London, right? So London kill zone between this little area right here. It made a new low. This happened in New York. The next low was made in London and another low made in New York. This other low made in London. Price rejects it down here at London, trades all the way back up here to make the new high, to return to this order block from days ago, and it did it in New York right here. We make a new low right here. This happened in New York. Continued throughout the session. Now this area, new order block, after we took out this low and even gave you a new low. Price trade down starting in London, return to this new order block in New York and then drops again. And we get another return of price to, you can see this last little small order block right here. Used it right here, and right here, and right here, and right here.
All right. So I mean, it sounds like it's just the sessions we're looking at, but I guess what I was thinking was when it said like the London kill zone and New York kill zone, I thought I had to put fibs and find kill zone, like order blocks by a kill zone, like precisely or something is what I was thinking.
Nah,
Okay. Okay.
nope. It's just the ones that are made during New York, London, those are more valid. Okay. Thank you. Those are more valid. That's all that's saying.
I shall apply it to my back testing.
Yeah.
Hey, Corey, I have a question.
Uh-huh.
You see this chart you're on now, where you just pointed out all of these kill zone times and retest of order blocks. You see how all of them have these wicks, how it comes back and like touch and go. So kind of like what Brother Chin mentioned earlier. Lately, I've been having really good success on back testing, but also taking these entries, especially when price comes back to these order blocks and touch off of the 70% of your fib, that 70% areas is slanted. But I've also had some history and also recent where it has traded through. Like again, Brother Chin was talking about that part right there, being better able to determine when it's coming back at these order blocks. And I'm seeing here and that SP, with these wicks, and I noticed in my back testing and in some of the live trading, US 30 has like a habit of just wicking and just hitting that 70 and just going. So to be able to better discern whether, it's going to go through, and it's probably some FOMO in my head. You can help me with that. That when I see those wicks come back to those order blocks, especially in that 70% area, that entry area, because I put your order block fib on with the 0, 50, and the 100. And then I use that same order block to put your fib on that has the 70%, 78%, 61% entry levels. And I mark my sniper zone area from the 78 and the 61%. So it'll come and tap, like I said, the 70 and go. And then sometimes when it retraces, or sometimes it'll come through and hit the 78, it'll dig deeper, but it won't close. It'll close at that 78 and take on back off.
Yeah.
So I've been loving how that's been going on. But it's those times when it will come through and dig maybe deeper to a deeper order block. So I guess what my question is with all that background is, how do you play that? And I'm sure you're probably going to address my FOMO on some of these situations. When it comes back to your order block, and especially when it hit that 70, and you now ready for it to reverse back in the other direction.
At the end of the day, I mean, it's just a situation where where it is, right?
Right.
At worst case, just put a small trade in, even if you don't know for sure. Like once I see it at an order block, I know it's at a high probability area, right? So even if it just come to it and it wants to keep trading up, there will still be an opportunity for you to get in the trade, take some profit, and get out. That's why it's a great place to trade from, because even if it's not ready to go, like if we had been trying to use this one right here, let's look at this one.
And while you're doing that, I will also say a really good example is like today when it kept dropping in that area of 43.52, and I took the trade there twice. And then when I went out and came back, I noticed it came back this third time, but it went through, right? So that's kind of like a good example too. Like it could have gone through the other two times, but it didn't. And I took advantage of it.
Right.
But like this last time, it went through. So what was the determining factor for me if I wanted to take it a third time? How would I approach that? I guess is what I'm saying.
Looking at this one, right?
Okay.
Looking at this one, right? We see that it already bought once, right? And this one right here, it wicked it. So imagine you getting into this trade, stop loss below this wick, right?
Right.
And let's say you hold it, right?
Mhm.
And you get in somewhere along the low of this area right here. Let's say you got in around here.
Right.
You still went in profit 400 pips before it came back to your entry, right?
Right.
If you had a got in down here, this wicked you out, but you would have been closer to a stop loss, right? You stay, let's say, okay, cool, I'm gonna still try to get in this. I still like this for the buy, right? Okay, I'll use this low as my stop loss now because this is the most recent low. And I'm gonna try to get in on any one of these candles, right? So let's say you got in right here, right? It never hit the stop loss. You would have made at most another 400 pips out of this, right?
Right.
Before it did this and dropped, right?
Right.
Before it dropped, right? So you would have had, like, again, that's why it's like, that's why I think everybody should learn this, because like, even if you get into these trades, even if you're in the wrong direction and you trading from the order blocks, a lot of times you can get in these trades, and even if you're in the wrong direction, you'll get a bounce to close out in profit at some point, whether or not it's ready to go or not, right?
Right.
And you'll get an opportunity to at least make some money off of it, right? So, if you go in and it doesn't go immediately, but it never hits your stop loss, you can just adjust your stop loss and then just see how it plays out. And then maybe it doesn't, if I'm down here, my goal is to, when I'm looking at this area, right, I'm trading from this area, and let's just say, it's an order block right here. My goal would have been to trade to the last order block, which would have been this area.
Right.
And then the higher one up here. That's what I would have been looking at. So if I had a got here, I pretty much made it from here to this next order block. I would have missed it by a hair, but at this point, you got to make the decision. All right, it fell here, fell here, fell here, fell here. I'm gonna take some profit, And even if you just throw in, a small lot size, like for some of my bigger trades, I don't even care about the entry. I don't even care about the entry. Like I will find the order block on a daily or on a higher time frame, and I'll just put a pending order at the high, the middle in this area, and I will just leave them there. I'll put a small one at the high, and then I'll put a bigger one in the middle, and I won't even think about it. Like I'll get pulled in the trade, and by the time I find out I'm even in the trade, I'm up 500 or 600 pips on the daily. Because at this point, I know as long as it doesn't take my order block out, I'm good, right? So these trades that we closed out, I think, like if we go on the daily, when we got into this trade right here, and this trade, and this trade, I did not care what the entry was. I just know, put it at the top of this order block, put it at the top of this order block, over here, entry, go, right? Once I see price, take it out, come back to it, entry, go. And as long as it don't close below this wick, I'm good. As long as it didn't close below that wick, I'm good. As long as it didn't close below that wick, I'm good. As long as it didn't close below this wick, I was good, right? And just to let it go. Because at that point, I already know I'm entering at a high probability area.
Appreciate it, Corey. That helps, definitely.
Mhm.
So earlier when you were saying about once another order block is created, you don't worry about the other one. You keep your eye on it if you're in a trade trading back to it. Seems like because that's where it could potentially reject, correct?
Yeah, let me show you.
Or maybe I misunderstood previously when you were saying that you kind of don't have to pay attention to it.
I mean, I'll pay attention to it, but is it relevant where price is right now? Not so much. Like,
Yeah, I got you. It becomes relevant if you trading back into it.
yeah.
Got you.
So let me find an example. This was one on the upside, right? This was a bearish order block, right?
Right.
We made a new low. Price came back to it. It rejected initially, right? So now it's like, do we need to still watch this area? We do, but not for the same reasons, right?
Right.
At this point, here's the order block right here that they put in to get through this. This was the
Gotcha.
bearish one right here.
Right.
They realized down here that they wanted to get through that one above here to the downside. So this is the bearish. And I'm going to use these symbols right here. This is a bearish.
Mhm.
Right here. Right. They used that one to push it down. And then this is a bullish. They needed this one over here to break through this one over here on the left. Do we need to consider this order block right here anymore? Not so much, but we do need to consider this high because that was the last high. This order block over here made a new high, right?
Right.
So you want to still be looking for price to either hold this area, it didn't, and trade down. They created another order block. There's probably one on the lower time frame over here somewhere, which is this move right here.
Mm-hmm.
It's a bullish.
So it never has an effect on your trading again once it's filled, period.
I'm gonna say no, but
Okay.
with a caveat. It could. I mean, it could always do what it wants to do. But usually once it's filled, it's not usually an issue, you know. Not usually something you need to worry about.
Okay.
You may need to use the high or the low involved in that order block, but you might not need to worry about your concerning. Because if it's coming back to that, 9 times out of 10 is going to grab the liquidity above this. Just like
Right.
if we see this price come down to this little order block right here, and it didn't hold it, the low of that order block right here, that means it wants the liquidity that's below it.
Mhm.
And
Yeah.
it grabbed the liquidity, wicked it, pushed down a little more, ran, just like over here. The liquidity is above 42.45. It wicked it, grabbed the liquidity, pushed down further, and then just ran up anyway. So that's probably what we got going on over here. It didn't hold this one. It tried to over here. We got a couple nice big strong up candles and wick rejections right here, but eventually it traded through it right around here. Now that it traded through it, this was the most recent liquidity at 42.52, 43.52. It took that out, and now it's going to react to this area, this one. And as long as we don't come below 42.69, 42.34 area, we should be good to try to buy this.
Are you in for buy?
I was, but I got taken out.
Okay.
It might not be ready yet. Might not be ready
Mhm.
because I got taken out earlier, somewhere around 80 something, 43.80. But even in a situation like that, I wasn't right. I got in on this candle. It pushed up, wicked me out. It would have, I took profit up here, but then if I had left that in, it would have wicked me out. But again, still had a chance to make 200 pips out of it. You see what I'm saying? Even without necessarily being in the right direction at the moment.
Yeah.
So that's what you gotta do. That's what you
Yeah, I
gotta
mean, now, I mean, the trend is still down with SPX, correct? But because it's XPX, you know, we always looking for that buy, right?
Yep. Yep. Always looking for that next buy. And it's about a 3% move too.
Yeah, I was checking that out. That was really good how you broke that down. I've been looking at that.
This was a 5.4. This is the biggest swing we done had in a minute.
Mhm.
You know, this is around on the it's been a while since we had a move to the downside this long. So for me, any day we could get that pop back up. That, you know, just not in no rush. Not in a rush. I just got my alerts, waiting for them to start alerting, and then go from there. Once it get to my area. And let me see something right quick. Hope you can see this. Okay, and on that note, you guys got anything else? If not, I'm about to hop off. And
I'm good. You fed me as
Wait,
usual.
you already sent us the link?
Oh, hold on.
Yeah, not with all this information, Corey.
Good reminder, sis. Good reminder. So, Cora, LA Rams fans, welcome in Atlanta.
Shoot, we looking for, I'm looking for another team, man.
Come on to the West Coast, bro.
I'm about to have to find me another team too, man, because
Jumpers, we just started the season.
I'm a huge B-more fan, though. I got to roll with my boy.
yeah, I might have to be a Baltimore fan this year. I can't take these Falcons, man.
Go at the Raiders.
we
I
just
convinced my
started, Corey.
husband.
Right. I was liking how they were looking too. I was liking how the Raiders was looking.
You know, we don't, Corey, you know, we're not in Atlanta no more, but my husband, he's still low key watching them sorry Falcons. I say, why you still watching them? He's like, no, I'm a Raiders fan. I said, no, you're not. I was like, why you still holding on to them? They just disappointed
It's
every
bad.
single time.
It is
That's
bad.
funny. And then he gonna tell me the Raiders 2-0. I said, see, all the more reason I told you need to switch.
It's bad,
I
man.
said, what's the Falcons? 0-0.
They gonna be worse than that too.
No, we're gonna bounce back. Stop saying that.
The Falcons haven't recovered from that comeback that the New England did in the Super Bowl.
That's funny.
We're
I
about
gave up on them.
New England came back on them in the Super Bowl. Shoot, they haven't been right since.
they'll bounce a ball off of somebody's head before they bounce back.
I'm telling you, they're gonna bounce back. Now stop saying that.
Nah, bro. That ain't gonna happen.
Don't forget to say you sorry when they start winning.
I ain't worried about that at all. They've almost made me not even want to watch sports, man. That's how mad I am. It is.
Man, they find every way to lose. It's crazy. I was rooting for them Sunday against the Bucks, but man, I'm like, come on, Ryan, what are you doing?
I don't even like. For a long time, I ain't even watched sport because I had got so mad at them. All right. Okay. Didn't go over get no questions in particular, but let me see.